If you have been watching your favourite material stocks fall recently and seeing your profits being wiped away, then get ready, because tonight we break down the recent sell-off in materials, what it means for your portfolio, and why the next move could make or break the whole sector. With insight from our government-accredited share trading education that has our experts regularly called upon by major media Australia-wide, I'm Dale Gillam and I'm joined by senior analyst Philip Tortesky and Pedro Banales, and we are Wealth Within. Good evening, Phil. How are you doing?
Good evening. Yes. Awesome. We had a nice lunch.
We did have a nice lunch, actually. It was very good having lunch with you and the boys and the team.
Yeah.
So nice camaraderie. And we were without Janine tonight. So we got Pedro. How are you doing, Pedro?
Yeah, very good, guys. Good to be on with you and looking forward to a great show as always.
Yeah, I haven't been on with you for a while, mate, so get ready, strap yourself in, and we're going to dive right in. But after a stellar run in 2025 where the material sector surged 80%, we've seen a sharp fall of 15% in the last month, causing some major concerns for investors. Now, is that a concern, or is that concern warranted for our investors now, mate?
I'm not so sure. I mean, we have seen a slowdown. First and foremost, the material stocks, they're not, like they were traditionally, one material type stocks like coal or iron ore. Right now, a lot of them are diversified. Rio's been moving into lithium, BHP with copper. But when I look at the overall dynamics, we have seen, I guess, that big boom over the last couple of years has come a while back from the Chinese property demand when we're talking about iron ore. That has slowed down, that's fair. But we have seen, big growth in terms of, the gold space. Central banks are still buying gold. That hasn't changed. In terms of the copper space, AI demand is still higher than before. I haven't seen a slowdown in that as well. And when we talk about, just the, I guess, push to secure critical minerals and materials, that hasn't changed because war's still escalating, so that drive and demand is still there. So most of the major demand markers are still there for the material sector, but as you know, like all things, you see a market go up 80% in a year, there's going to be a pullback.
Well, you got to bet on it, don't you? It's sort of like when we talked about SpaceX, the float, both you and me went, it's going to tank, and people jump in on this speculation, and we're going to talk a bit more about that later on. A really good example of why you shouldn't speculate and why you should be making sure that you understand what you're doing when you're actually trading the market. Now, with war recently escalating, I want to ask you, Pedro, do you see the oil price halting the chances of further rises in material stocks, given there has been a lot of churn through, or they churn through a lot of diesel during their operations?
Yeah, look, that seems like the logical point, but when you look at the chart, it's actually the opposite. Actually, oil and the materials sector has a positive correlation, meaning that they move together. When we go to the chart, I'll explain what I mean by this. So we've got the material sector here. That's a monthly chart at the moment. Now, if I go ahead and overlay the oil futures chart on top of that, we can actually see that it moves right in comparison to the overall material sector. It actually has a very positive correlation. There's only some periods that you can see back here in 2011 when the material sector was moving down while oil was moving up. But generally, they tend to move together. And what's really exciting at the moment is that the oil price has now found some support and is moving up. And I suspect that it will continue because it doesn't seem like we're going to see an end to this conflict anytime soon. And we're seeing Iran now target the oil and gas infrastructure over in the Middle East. So that is putting upward pressure on the oil price. But we're seeing the material sector actually move down. So since the oil price is more of a leading indicator and it is moving up, I would suspect to find some support for the material sector quite soon. And you can just put a simple trend line from this low back in April 2025. And you can see that it's actually coming back nicely into trend. If I can just put that trend line a little bit more apparent here on the chart, you can see that it has come back to trend quite nicely. And we do have this gap as well that has formed back here in March 2026 that is yet to be filled. So I think that it will come back to fill this gap. We might see a little bit more further down pressure for the materials sector, but I think that it would find support at around that $22,000 level. And that's going to present some awesome opportunities for investors that are ready to capitalize from this next move, because we've got some of the best stocks on our market right here in this sector.
The market runs up in stairs and down in elevators, and at the moment, to go upstairs, you've got to put your foot down. I think that's what's happening with that. The material sector at the moment, it had such a strong rise through last year. You can guarantee that it got overheated for a little bit, so it's just easing back a little bit. But I do like that you actually stole my question. I was going to ask him, what's the leading indicator, oil or materials? And he answered me before I could even ask you. Are you He was doing a premonition, I think he was.
Yes,
what do you reckon?
There's something in the water out there.
There must be something in the water where you are, mate. But anyway, let's get into the stocks now. So I'm going to throw back to you, Phil.
All right. We've got an awesome one, and I know this one has been on your radar for a while. This is S32, the first stock we're going to look at. And very interesting. I mean, S32 for me, obviously diversified global miner in aluminium, copper, manganese, silver, zinc, and nickel. All hot commodities in this recent boom that we're having. And for me, $4 stands out. I mean, it's such a huge level. It was a level this market has really struggled to find the base above. It almost did it back in 2022. But since 2018, you can see how strong it's been, even recently in 2024, failing to find a strong close and a new base above $4. Now we're seeing something very different happen, Dale. This is the first time.
That frustrated me, that part.
Yeah.
Because I was waiting for that and thinking it was going to go, and it just didn't go.
And that's what you get. I mean, a lot of the time people talk about material stocks and they go, oh, they're cyclical. Yes, they are.
They are.
They are cyclical. But on top of that, they are very volatile. So,
but a lot of material stocks are also what we'd call growth stocks, not necessarily cyclical stocks. A cyclical stock to me is something that goes between 50 cents and $1, and it just does that, or $1 and $3 or whatever, and just goes up and down. That's a cyclical stock, and it does it very regular. But when we're seeing stocks like BHP, Rio, Fortescue, they're growth stocks.
Yeah, you took the words out of my mouth.
They might have highs and lows around the same periods of time or the same lengths of time. Their cycles might be very consistent, which they are, but they're not cyclical stocks in my book.
Yeah, they're rising. They're rising. That's the point. And exactly what Dale's saying, if we just go to that chart, we are seeing that next, because it ties in perfectly to what I'm about to say, over time we do see that growth. Now, right now, this is the moment where we're really going to find out, are we going to break through to that next leg higher? Because it'll be the first time that we hold $4. As a base.
As a base.
And that's what's really exciting to me right now. We've had, since March, 1, 2, 3, 4, 5, will be the 5th month where we've bounced around $4. We closed only once in June below $4, but it's been picked up instantly. And the majority of the closes that we're seeing are above that level. And if we can push higher, I'll get on the weekly chart because $4 is everything for me. If we can now start to push higher and take out these $4.30 levels, we're looking like we're going to find a new base at 4. And if that is the case, then get ready for S32 to get into the 5s and above. So very interesting, perfect time to be looking at a stock like this. Just watch these lows. If it takes out $4, forget about it. But it's at a crucial point right now.
And I've made a mozzarella of this stock before, so I'm waiting for it the next time.
Yeah, well, that's how it's done, right?
It is. And the thing is, it's so regular that what this stock actually does, and you can only have to look at the chart to know that it runs very, very well when it does actually start to run.
Well, I said a joke yesterday, and maybe you didn't watch the show, but I said if we sat on a panel with a whole bunch of expert economists, which we're not.
Which we're not.
I mean, we know a bit.
Don't pretend to be.
We know more than enough, I think, but we're sitting on an expert panel, economists and forecasters and fundamentalists. And I said, if we just ask one question, all of it's great, build your stories. Just tell me when you're going to buy.
Yeah.
And if the room goes silent, then that's all you need to hear.
Yeah.
Because
you can do all the fundamentals and all the research that you like, but at the end of the day, you've got to buy or sell. That's it.
That's it.
So that's confirming the time when you're buying and when you're selling, which is most people don't get right. That's why we see so many people with emails saying, what's the best time to buy this, or when should I sell that, or, should I buy this now? If you're asking those questions, that means you don't have proper buy and sell rules.
Yeah, and that's your edge. I mean, that is your massive edge as a retail trader.
Oh, look at how many times my buy rules haven't triggered and the stock's just fallen away, and it's like, whereas other people are getting into it then going, why did I buy this?
Yeah.
Because it keeps falling away. But anyway, we do need to get into the next stock. As I said, I am watching S32 though. Very, very closely.
Yes.
So are we going to Pedro for the next one?
Yep.
Well done, Pedro.
All right, I do quite like SCD2 as well, guys, but this one is looking nice also. It's a pure gold play. It's called Vault Minerals, ticker code VAU. It's an Australian gold producer with mines across Western Australia. They've also got one in Canada. And I've got the monthly chart up here. Now, when we zoom out, it's always good to look at the bigger picture first, of course, like we always say. Now, this period back here, back from 1996 to 2013, it was a whole different beast. Back then, and you can see the volatility. I wouldn't be surprised if this was some type of backdoor listing because it really doesn't resemble the same type of stock. Now, after that 2013, it really just trickled sideways. Then we get a little bit more interest when we get into the 2019, and you can see the patterns start to form. And this is where we really get excited as traders and as technical traders as such. This is when we can start applying our techniques and get in at the most opportune times and get out. I mean, if you're trying to trade throughout this whole spaghetti period over here, I mean, you're fighting uphill basically. But when you're trading a nice liquid stock, this has become a lot more liquid. Your chances greatly improve. And right now, it does look like it has found a base. And that is around that $3.50 marks, roughly. It has these previous peaks around that period and previous troughs. It's also got that nice little momentum happening, which it didn't quite get down to, which is okay for the moment because you've got two solid support levels around that $3.50. Another thing that I really like about Vault Minerals is that it does track the gold price. And if I overlay the gold price on the chart of VAU, you can see that it does track it quite nicely. But notice how gold is trending down and it still doesn't seem to have found a base, yet VAU is trending up at the moment. It looks like it's reversing quite nicely. So there's something operational that has changed, and that's what you want to see from these miners, whether they're getting the cost down to extract the gold out of the ground, whether they're making good operational moves. If the company is going up while the underlying commodity is going down, that's a very good sign. Technicals aside, that's a very good signal. But the technicals are looking beautiful right now, and I think that this one might be almost ready to go.
I like it too, mate. I really do like it. So well done with that. And if you want to understand what Pedro's doing on the chart and understand how to draw those lines and making sure you're buying and selling with confirmation rather than just guessing, get a copy of my book, How to Beat the Managed Funds by 20%. It's free. You just got to pay the shipping. If you go to our website, wealthwithin.com.au, you can get your copy there, or you can click a link in the description below. And one thing I'll say, if you're new to the stock market, and maybe this is your first time seeing us here on this channel, well, welcome to our channel. But if you're new to the stock market, I did a beginner's stock market video at the start of June, so only 2 months ago. It actually tells you how to get in the stock market and informs you about what the stock market is, what stocks are, how to buy, how to sell, and understanding really how to get started in the stock market with very little money. So go and check out that video on YouTube. Now I'm going to go to Phil for another stock.
All right.
Right now, you've had your drink?
I've had my rest. All right, let's go. Perseus Mining is the next stock. Another interesting one. Now this one's been in a beautiful uptrend. Perseus Mining since 2023, new all-time high. If I'm looking at this, I'm looking at it more of a short to medium term opportunity, just given how strong it's run. And I think it's important to classify this. How many times do we see questions come in and say, I like the stock, but how do you like it? For what?
Well, they don't tell us.
Is it a short term trade? Is it a medium term trade? Is it a long term trade? And there are strategies to take each of these different styles, successfully. It's so important, and I think it gets forgotten a lot in trading because you're so eager to say, I just want to buy. I think it's good.
Well, they do. How don't you love those three word emails to us going, tell me about X? Analyze X for me, and it's like, why?
Well, yeah, and it's
a great question.
Yeah, and the layers under it. I mean, because that dictates the time frame you trade on. It dictates the rules you place. It dictates so much. So just looking at PRU right now on the chart, I think this right now is more of a short to medium term opportunity, given it's pulled back to trend, which is quite nice. It hasn't really found buying yet, so it is the perfect time to look, not the perfect time to enact. it's got to hold this level through here, $4.48, I think, for bullishness to occur. And we've got to start to see a bit of uptick. I would anticipate any nice moves or reversals from these levels. Look for a run up to that 570 or back to the all-time high at 650. So short to medium-term trade, not confirmed just yet, but I do like this, the way this price really bounced on the 12th of June. We saw a bit more volume come through. Buyers try to push it higher. Sellers have come through and they've had about 6 weeks of action. We're still holding here, and this is the one we've got to hold.
Yeah, I mean, volume's dropping off as the sellers are coming in. So it's
nice to see.
It's nice. There's not a full indication, but it's nice to see. But you are so right. There's so often, when I'm mentoring people, and they ask me a question, I go, we've got to keep the content and the context of what you're saying. So what is it you're saying, but what's the context we need to apply that in? And often people, we find that their context is completely wrong in what they're trying to do with their trading and rules they're using rules for long-term trading to try and trade short-term, and short-term also trying to trade long-term, and the wrong stocks for the wrong rules. It's just quite all over the place that we see everybody do, isn't it?
And the expectation of what a strategy can give you. I mean, it's one thing to build a strategy, but then it's important to be realistic about what that particular model can give you. Does it operate in all market conditions? Is it just a strategy that works well in a bull market? Can you trade it short? Can you trade it in sideways markets? These are all questions that need answering, I mean, when you're building things. So,
look, it totally is. Actually, only yesterday I was chatting to this guy. He's like, oh, can I do your course? And, and I said, well, yeah, you can. And he goes, yeah, but I'm unemployed at the moment. And he said, oh, I've got, I need to learn how to trade and start making money within the next few months. And I went, well, you're shit out of luck. And he's like, what do you mean? I said, not going to happen.
Yeah.
Just not going to happen. It takes time to learn properly and to build the skill and to how to do it properly. But that's what I'm talking about, is they were trying to trade the market, but in completely the wrong context, and obviously the rules that they're going to use is just not congruent with their level of skill and experience. But anyway, everybody, you can stick around because we do have a lot more amazing stocks coming up shortly. But now that's time for our trending topic, and Phil's going to handle that one for us.
Yep, normally Janine, so hopefully I can do her justice. But if you've ever heard the saying, history doesn't just rhyme in financial markets, it repeats. Well, check out this fascinating story out of South Korea this week, where a young investor turned his savings into a fortune using borrowed money, only to watch it almost all of it disappear as the market reversed. He admitted, I couldn't breathe after the losses, yet says he plans to borrow again. Now, he's not alone. Margin debt in South Korea has exploded as retail investors pile into leverage trades, chasing quick riches in the AI-fueled stock boom. Now, regulators are now scrambling to tighten the rules after speculation got out of hand. But here's the interesting part. This isn't really a story about South Korea. It's a story about human behaviour. You go back to almost every major market top in history, whether it was the dot-com boom, the property bubble, or the meme stock craze. As confidence peaks, retail investors increasingly borrow money to buy shares, convinced prices can only go higher. Now, leverage magnifies gains on the way up, but it also magnifies losses when sentiment turns. So the question for Australian investors is this: are we starting to see the same psychology here? The latest available Australian data shows margin lending outstanding was around 16.8 billion at the end of 2025, up from approximately 15.5 billion the previous quarter. However, during the 2007 pre-GFC peak, Australian margin lending reached 41.6 billion. That means today levels remain roughly 60% below that speculative peak, which tells us a lot about where our market is. But let's take a look at the Korean stock market. I know you want to say something, or you didn't, just before I look at the Korean
I can
market.
say a hell of a lot about that because I watched the GFC unfold and the margin lending and how people just abused it. Like literally, you're talking about $41 billion, but we're talking nearly 20 years ago. So what's today's value of that?
Yeah.
So it's more than 60%, when you really do look at it. And we had the most amount of margin lending in numbers of new accounts and the amount of money borrowed in the last 6 to 12 months of the boom. And the most amount of record levels of margin calls, when people having to force sell their stocks in the last 6 to 12 months, just before the market finally bottomed in March 2009. It was every day, it was record levels of margin lending calls, record levels of margin lending calls. And most of the money was going into passive managed funds, index tracking managed funds. Now we're seeing it go into passive index tracking ETFs. So it's so similar, it's not funny, and it's going to happen again.
Yeah, and the crazy part is if we just bring up the chart of the Korean index, which I want to show, you know, you look at this, Dale, where we are today. I mean, this, if you go back to 2007, the way our market was ending, same.
It's just human psychology. It doesn't matter where you are in the world. And this is what people say, oh, can you teach me to trade the US market? We'll just teach you to trade.
Yeah.
Because it doesn't matter. Human psychology doesn't change whether you're Korean or whether you're American or English or Australian or, you know, you're Norwegian. It's still fear and greed. And this young kid, he's learnt the hard way, but he hasn't learned.
Yeah.
He wants to go and borrow more money. But to me, the smart thing is go and learn what you did wrong first. And then once you've understood what you've done wrong, then go and borrow money if you need to. Because borrowing money just accelerates your gains, but it also accelerates your losses. And if you don't have the knowledge to buy and sell at the right time and protect you, what it's doing, that amplifying losses, really kills you. And that's why a lot of people fail at the FX market. That's why a lot of people fail in other highly leveraged markets as well, because they just can't handle the leverage.
Yeah. And I mean, even recently, Bitcoin's another market that comes to example. Gold is another one that ran on hype the last couple of months before the big sell-off. Let's just go to the Korean chart. I want to at least have a bit of a thought on where this thing may stop falling, because there's probably Aussie investors in this, Korean index ETF for sure, no doubt, because it is very much linked to the semiconductor space. So when I look at the trend line of where things are for Korea, it's really shot off, and I think really a move back to that 5,600 is very much possible, if not even deeper, because if we just zoom out big picture, have a look at the way that Korean...
4,500.
I mean, that is the natural trajectory of the Korean index. That is a stable, safe trajectory. Look what we're doing today.
Yeah, and it just shows you that. And you can see patterns like this on, as you said, crypto, Bitcoin and other ones. We've seen it on lots of different meme stocks, like GameStop back a few years ago, other meme stocks where they get into chat forums and rant them. We see the same thing over and over and over again. People borrow money because they're seeing the greed, how much money they can make. And then when it turns, they don't know how to sell. And then it starts pulling away. They think the money that it got to was their money, and it drops 15% and they go, oh, well, when it gets back up to where I had it before, I've already lost 15%. I don't want to lose that. And it drops 40% and 50% and they can't sell because they've lost too much money. But to me, if the money's on the market, I always think it's not my money. Until it goes back into my bank account, I treat it as not my money, because I don't control it until it gets into my bank account. And it's a different shift that a lot of traders have. You have to be there, because all I can do is buy and sell. That's it. So if I've got in a stock and it's gone up, I stay with it. If it goes down, I get out of it. It's pretty simple.
I mean, the best thing a trader can do is just completely take off that profit and loss area of your brokerage account, because like Dale said, it ain't yours until it's yours, and it doesn't matter how much it's gone up and down if you're trading well. And I think this is where that whole psychology discussion goes into as well. I mean, there's so many books being written about psychology and your psychology this and your psychology that, but for me, over the, however long it's been, I don't even want to say it because I'm starting to feel old. And I'm not
feeling old.
No, I'm not old. I'm not old. But 20 years, looking at this stuff and doing it. And discipline is what breeds good psychology. Discipline only comes from skill, from knowledge, from strategy. You can't have discipline if you don't have a strategy in the market. And there is no way you can, over time, be consistent and confident. And that's the biggest killer. And this is the cheat code. Right here, looking at charts, doing it right is the absolute cheat code, because you can see with your own eyes euphoria, fear. You don't need to be stuck in these environments, and we never are.
And we're not, and that's the point. I often say to people, here's the keys to a Ferrari. Oh, by the way, it doesn't have brakes. You can drive as fast as you like and as wild as you like, but are you going to drive that super fast if you know you don't have any brakes? And that's the point. But that's the point of this young kid in the Korean market. He didn't have any brakes. Where do I get out? He didn't know he was going to crash. And it's probably still got further to go, and he hasn't sold yet, my guess. But anyway, I think we need to move on. Anyway, otherwise we could be here for ages. But if you do want the skills to analyse stocks properly, just like you're seeing tonight, visit our website, wealthwithin.com.au. But I think it's time to get back into some more of our stocks. Now, let's go to Pedro for the first one. What's the stock we've got for you?
Yeah, sure. So next one is Capstone Copper, ticker code CSC. So on the screen right now is the chart of Capstone Copper, monthly on the left, weekly on the right. Now, this is an international copper mining company with producing mines in Chile, US, and Mexico. So it is on the other side of the world. Now, it's a fairly new listed company. It only came out in the market 2024, and it did what most IPOs do, and it goes up a little bit and then tanks. But now it actually has held up quite nicely. It's above the listing price, the IPO price, and it looks like it has found some support, and it's establishing higher bases. If I put a nice trend line below it here on the monthly, it's holding up quite nicely. Another thing I just wanted to outline is that we've actually had a look at this stock before on the show, and I'm sure we've had some questions around it. And I remember it was around back here in 2025, December, and we said it was looking quite nice because it was forming an interesting pattern that I'm sure our students in Module 5 would be well aware of, and it actually does these patterns multiple times, so you can actually reproduce your results. Now, from there, and I believe it was around this period, it went up around that 24%, but now it actually has tanked quite a bit. It was around that 32% from around that point, and from the all-time high, from the peak, it's down 46%. So this outlines why it is important to understand which stocks are looking interesting, but buying is only one part of the equation. And if you start to take tips, including from us, I mean, we can tell you, yes, this is looking great. Buy now. We could even be saying that. But who's going to tell you when to sell? That really just comes down to you, and you need that knowledge inside of your head because you're the one responsible for your own capital and your own money. Basically, it did establish a nice trend, and there would have been multiple opportunities for people to get out if they were in the stock. Now, I think that it is providing another opportunity, but of course, the question is, when do you sell? And really, that's outside of the scope of this analysis. Obviously, you could look at one of our courses, even the mentoring course as well, as it provides some basic rules that you could just apply and just at least test the waters in the market and get some experience. So at the moment, I do quite like it. It has established a nice little uptrend here from that low in March 2026. It's holding up. It's at critical support. I'll just put one more line on the chart here that is quite important, and that's around that $12 mark. Look at that. $12 has been such an important level for this stock, and it's bounced right off it just recently. So definitely a good opportunity coming up.
I'd have to agree with you. It does look pretty good. But one thing, while we're talking about leveraging, I forgot to mention chapter 9.
Oh, yeah.
In my book, talks about leveraging your way for success. And if that young kid had followed just the rules that I talk about in chapter 9, he wouldn't have got stuck. With it's very, very simple to do that. And I remember during the GFC, Janine and I were trading something like 300 and plus accounts for people and tens of millions of dollars. And we had margin lending for about 80% of that. And we didn't get one margin call. And I remember, the boss of St. George Bank at the time, who were doing our margin lending, he called me to Sydney to their boardroom. And I said, why am I here? And he goes, because you're the only introducer to St. George margin lending in the whole of Australia that never had one margin call. He said, how did you do that? And I said, just read chapter 9. I didn't say that, but you get my point. But the thing is, there's some rules around it. So again, link in the description, you get the book for free. You just got to pay the shipping. So that's the next stock.
All right, Iluka. This one here is, let's get to the chart and have a look at Iluka. Another really interesting stock. Now, why it's so interesting to me, it's the developer of Australia's first rare earths refinery. And we all know how rare earths, how popular they were over the last couple of years. Their importance in the critical mineral space, especially, and I know they say that rare earths aren't that rare, but to produce them and to refine them, it
takes a lot of effort.
Yeah, and right now we are seeing, truth be told, the US and China starting to part ways on a lot of things, and given China was the biggest rare earth supplier to the US and rare earths are used for defense and all that kind of stuff, the US is looking at alternate options. Australia was one, definitely.
Yep.
We saw that big boom. Looking back now, the market has pulled back. And what I find interesting, again, we're sitting in another scenario like S32 prior, where we have the potential to pull back on a higher base. I mean, last time round, we came all the way back down to $3.30, which was traditionally a massive level. You can see that, just by looking through the chart. But moving on, we bounced up to that $9.50 level. Now we're testing multiple times on this $6 level. So I think as long as we hold 6, potentially another opportunity coming up, and I'll just keep it on the monthly here, and look for an opportunity up to $10. Recently, that's the cap that the market's been telling us at, but still, being able to put some nice rules around a trade and have some really good risk reward, you're looking at a 55% opportunity,
and they look nice,
potentially in a matter of months. So hey,
but this one you'd probably call a lot more of a cyclical stock, than a BHP and Rio, because obviously you're getting 200, 300, 400% in runs, there before it crashes. So to me, if you've got a stock like this, it's not a long-term buy and hold. You should always be looking at buy, sell, buy, sell. That's what you should be doing with a stock like this. But over time, it has grown higher.
But I don't know, could call me stupid, but I don't think any stock...
Okay, stupid.
I don't think any stock ever, if you have the mindset of buy and hold, that means really you're walking into the market saying, well, knowingly that the market's going to go up and the market's going to go down. And CSL comes to my mind right now on Cochlear.
Absolutely.
It just takes one of those moments to destroy a lifetime's worth of work as a buy and hold player.
Oh, absolutely. And one of them to do the opposite, and it can make your portfolio.
You're right. As opposed to walking into the market and saying, well, hang on a second, let me just get from point A to point B. Let me find a trade, hit singles. Yep. Let me hit singles and find trades and know that those opportunities are going to keep coming around forever. That takes out the biggest risk of buy and hold by having that one moment where you've lobbed in 20 years worth of work of dollar cost averaging or whatever on the way up, seeing it wiped away in a year or two like CSL. For me, I can't sleep with that risk. But,
no, neither can I.
But
you're right. So many people try and swing for hit the sixes with speculative stocks to try and hit it out of the park, but then they got all these other people that buy and hold that they're doing completely the opposite, but they're not getting the returns. And I only did an article actually was going out why it doesn't actually work. Why buy and hold is, that's old thinking nowadays. It's not going to work into the future. Have we got another stock, Pedro?
We sure do. So next one is Stanmore Resources. Now, this is a coal play, metallurgical coal to be precise. It's supplying high-quality coking coal to global steel manufacturers. And this is another one that has been in a nice, beautiful trend. And this one has, really been going up since 2015. And you can see that the momentum has been around this tangent here, but more recently at around 2020s, it has established a new momentum. So now we're getting into that nice steeper run. And this is one that's both cyclical and growth, because you can see that it does have those intervals of lows, but at the same time, the share price is a lot more than what it was back in 2015. I mean, when you talk about a low of 5 cents compared to $2.75, we can actually outline how much percentage growth that is. It's around that, over 2,000% growth. So this is a nice one. Still wouldn't want to be holding it and going through these runs. You'd want to be strategic and get in and out at the most opportune times. And I think that this is one of those opportune times because it has crossed above this downward momentum. It's consolidated sideways. It's compressing in the tight range. We've got that range between $3 and $2.10 or $2.20 to be a little bit more precise. And it's trading up above that to the higher end of that range at the moment. Going to the weekly chart, it's got higher highs, higher lows. It's established a nice momentum there again. So it is trending quite nicely. I think that this one is looking really, really nice. And with what's happening in the Middle East with oil, we saw last time when oil went bonkers, so did the price of coal, because a lot of countries scramble to get alternate sources of energy, and they go running back to coal, and that's the thing right now. I mean, the two most crucial and used energy sources to produce energy are coal and gas.
Yep.
Oil is mostly for petrol and diesel and jet fuel and things like that. But when you talk about energy production, coal is still king. So I wouldn't be discounting coal at the moment, and especially wouldn't be looking past Stanmore because it's setting up quite nicely.
Mate, I think I love that stock. But before you go, don't go away, mate. I want to get your favourite pick of the bunch before I go to Phil to get his pick. So is that one your favourite pick or is there another one?
Oh, there were so many. I'm not going to do a Janine and pick 3 or 4.
Good.
But I'll have to go with Iluka Resources. I think that one is looking beautiful, and I love how much upside that has.
All right. Well, I'm going to go to Phil now. Thanks, Pedro.
S32, I think. But like Pedro said, most of them look really good. So
They do. My S32 was my pick, but I don't mind that Stanmore Resources, the last one. I'm thinking that's pretty nice as well. But anyway, moving on shortly, we're going to get into our hot stock tips. But first, let's get into answering your questions. Now, Julian writes, could you please analyse Skin Canny? I think it's spelled Skin Canny Limited. I'll go to you, Phil, for this one.
It's a nice
Sounds like a funny stock. I've never heard of it. Skin Canny.
Yeah, it's new. It's a really new stock. Let's go and take a look at the chart. It's been around for 3 months. Shot off, and look, Julian, I think if you've obviously bought this, on close to the IPO, would have been nice to know your price. I can't really gauge too much in terms of trying to give you analysis, given there isn't much price history. But what I can say is the probabilities are not in your favour if we're talking about the way IPO prices or stocks unfold post-IPO.
Can I get into what you were saying before? Because his exact words were, could you please analyse Skin Canny Limited?
Yeah.
Right? And earlier you said, well, how do we do that? Because we don't know whether he's bought it. Mm-hmm. He's looking to buy it. We don't know whether he wants it short-term, medium-term, long-term. Super fun, we don't know anything around all of that, but we're supposed to try and that's all what I was talking about is context and content. Our content will depend on the context that you're giving us. So if you're saying, hey, I want to buy Skin Canny for the next 3 months short term, then we've got context, and whatever our comments are can relate to that comments that you've given us or the question you've given us, and it relates to it. But otherwise, we've just got to be really general about what we're talking about here. And it makes it really hard, especially for a newer stock.
Yeah.
On the market like this one. So I understand what you're struggling with.
Yeah, for sure. And I mean, at the end of the day, the majority of IPOs or stocks that just list on the market within 6 months are probably going to go below that IPO price.
Yeah, it's pretty much.
It's very, very common. And most recently, like you said, we saw it with the most popular IPO of the last decade, SpaceX. So, strictly speaking, you're probably going to get prices go below that IPO. Again, as Dale said, if you could give us a bit more information next time, I can really help you out in terms of whether you've bought or not or looking to buy. But I think you're going to get lower prices coming, maybe a better opportunity.
Yeah, well, we also don't want War and Peace either. Like some people send us like hundreds and hundreds and hundreds of words in their question. We can't put that up in a question, so we have to truncate it a little bit. But give us the general context when you are asking a question. But anyway, moving on, we've got Barry's email is next, and he says, I got your books in the mail yesterday. Super simple, powerful plan, just makes sense. With Origin back in 2008, they rejected a takeover offer for $15.50. Now currently trading well below that offer, and it seems to have steady rising revenue and earnings with long-term energy tailwinds. My question is, being that the stock is in a near trend support, is this a good time to buy? Would you just buy on trend support or wait for confirmation of a short-term uptrend? So he's given us a bit more context.
Yeah.
So would you buy it now based on what he's talking about and for a short-term uptrend? So what do you reckon?
Look, it's a good question. If we go to the chart, I think buying it now, I would say, well, where is your confirmation? That's the first thing you've got to ask. And is that present? That's something that sounds like you may or may not be a student, I'm not sure. But if you are, you would know the answer to that. Is it at definitely at a level that looks interesting? Absolutely. Do you have a predefined target in terms of what happened with the previous offer, $15.50? Yes. Is there enough upside to that level? Absolutely. So all of the things are ticking with this one. And the biggest question of all you need to ask yourself is, if we do rise from here, the moment you decide to get in, what is your risk reward to the next level? Because that'll dictate the opportunity, the what you're looking at in terms of a return and how much capital you actually allocate to a position like this. Because sometimes, like you said, do I wait for the trend to go up a little bit, if what I'm gauging?
He's not a student. He's just bought my books, which he's enjoyed, and obviously he's applying what he's learned, which I think is fantastic. And I'm going to get your comments in a second, Pedro, so you get ready.
Yeah.
Because we do need to answer his question, because one of his questions was, would you just buy on trend support or wait for confirmation of a short uptrend?
Yeah.
So he's not, when I read that again, he's not wanting to trade it short term.
Yeah.
He said, would you wait for confirmation of the trend? So I'm going to throw now to you, Pedro. What would you answer him?
I think it's a great question, and I think it actually shows maturity on his part to be asking that. You don't hear the word confirmation from novice traders, and especially from the types of questions that we hear. So I think that's excellent that he's asking these questions. The question as well to be asking is, how do you confirm that trend? And obviously there's different ways to confirm different trends. There's different tools for different scenarios. And right now, I don't see a confirmation based on the rules that we teach in the course. It has come back to trend. I do agree it has touched it quite nicely, and it is quite exciting. But I would resist the urge to just buy on the dip. It works until it doesn't. It would have worked back here in 2022, great. It would have worked back here in 2025, great. But one day you're going to get caught. And then once you don't, when you enter without confirmation, and then you start seeing price do something like this and you're in 20% loss, well, then you go into fear mode and you start making rash decisions. So definitely that confirmation is key. I would say if you're really enjoying trading, at least maybe look at the Trading Mentor course, dip your feet in a little bit more, because that's going to bring you to that next level and actually teach you how to confirm. And then you can replicate the tools, because the rules are really meant to be objective. Either they're there or they're not. And a lot of people add all these different things. Well, the stars need to align and all these things need to happen. But then they're very specific scenarios. Whereas if you have just objective rules that every time the stock does this, I do that, or I buy or I sell, then that's going to give you a better probability, and it'll give you a history of how that trading strategy works. So that would be my advice.
Great comments there from you, Pedro. And I just, while you were saying it, I was thinking, like, how many times you've said to people, what's a short-term trend, and you've got a dog's breakfast of answers.
Yeah.
People can't answer it because everybody's context is completely different. For some people, it's a couple of days. Some people, it's a couple of weeks. Some people, it's a couple of months. Some people, it's a couple of years.
Some people, it's a couple of minutes.
Financial planners, it's decades. No, but anyway, let's move on to our next question. This is Jody, and she writes, I'd love your thoughts on IPH Limited for a short to medium term trade. Thank you for that. The stock seems to have found support at a significant level just above $3. If it can break through $4.34, it may find resistance at around $5.70 level, which also looks to be a significant level, but I would be happy with a 30% profit. So I want to go to Pedro first while you think about it, Phil. What do you reckon, Pedro?
Yeah, look, I'm happy usually with a 30% profit. That's pretty standard.
I'm even happy with 50%.
Yeah,
or 60%.
Well, I've been hearing from our students that that's not the hardest thing to achieve at the moment. But IPH, this is looking interesting at the moment. It does look like it has found some solid support. I believe that this is a software company. I have looked at this before in the IP space, so it is quite niche. So we're talking about the intellectual property space. So I'll zoom out the monthly chart here. It has found solid support at around that $3.10. It hasn't quite broken this momentum yet. It is right there at the moment. What I like is that it has actually broken away from, and I'll just highlight this whole period here where it was just trailing sideways. It was just doing nothing. Usually when you see these types of things and then you see price start to continue downwards, that's not a very good sign. But the fact that it has reversed from all that congestion and now moving up, and then when we get to the weekly chart, we're seeing higher bases starting to be achieved, higher highs. I think that $4.34 is a very reasonable level to be watching for. And, the comments about that 30% from that level, I think are quite sober, because that does look like the next important level of resistance at around that $5.
Yeah, but would you be getting out because of that? That's the question, isn't it?
Oh, yeah. Look, you don't get out just because of profit targets. Really, what if you could get 50% out of it? What if that's not the stop? What if the next resistance level is at around $6.90 or $7, which it does look like there's levels there. There's multiple levels that you can use to kind of gauge where the stock may find resistance. But really, you need your rules to tell you when to exit, and that's going to give you the best statistics.
Wise comments there from you, Mr. Pedro. Now, anyway, we're going on to Dejan's email is next, and he wanted to get our thoughts on Breville Group. He says, it looks to me like a strong long-term uptrend with support around $24. I'm not in it yet, but we'll be looking for an entry below $30. What do you guys see as a good entry point, and how would you manage the downside risk if it turns? He said, P.S. I'm not a student yet, but we'll be starting later this year. So well done. I'm going to go to you, Phil.
All right. Let's go and take a look at the chart of Breville's for you. Two things. $24, sure, nice support, but it's far away from there now. So, in context to how relevant that is, you're already 27% away. So I think that's an important thing to consider. An entry below $30. Right now, what is forming on this stock, there are two things going on. Obviously, Breville's is, in the discretionary space. We do have earnings coming up, and this is going to be a tricky time for anyone looking to buy stocks around earnings, especially these discretionary stocks, because we don't actually know. I mean, sentiment's at record lows.
Yep.
There's all this talk that the inflation is obviously hurting businesses, but at the same time, we've got that smoking gun AI, which last earnings season was the thing where it was cutting costs for a lot of these retailers.
Yeah, it was.
And they were beating expectations.
Yep.
But when I look at Breville's, I think it stalled a little.
It did.
And just looking at this line through here, I'd say it's really challenged on this momentum through here on the upside. Most recently, it's found a top through there. So I'd like it to get through the momentum. Why under $30? I'm not sure.
Well, that was concerning me. It's like, I'm looking for an entry below $30.
Yeah.
But what kind of rule is, I mean, he doesn't articulate his rule, and we don't necessarily need him to do that because quite often we can pick that up. But
to me, it's pretty simple. If you're looking at something like a cyclical stock, the conversation we had earlier,
yeah.
If you're looking for to trade range bound, sure,
fine,
makes a lot more sense to me. But we're talking about a growth stock, and a growth stock that is struggling at these $32, $34 levels. So that being the case,
has big pullbacks when it pulls back.
Yeah, and right now, I mean, if you're going to play that range bound game, somewhere around $24 makes a lot more sense. But even so, you don't have the weight of momentum to support you, because for the growth to happen here, this needs to be trending. And so it's a tricky one. Unless you're really short term and you say, I'm going to look to play 24 up to 30, okay, maybe. But if you want the real solid levels that price is going to continue high, it's got to get through this downward momentum for me. And be careful of earnings. Make sure whatever you do, you do know when it's releasing.
Yeah, I think, Dejan, when you start our course, go and play this video again and check out Phil's answer, because it'll make a whole lot more sense to you once you start our education. But now's the time for our hot stock tip for the week, and I'm going to be throwing back to you, Pedro. So what is it?
All right, it sure is. So the hot stock for this week is ALK, Alkane Resources. Now, the company has recently come out, and when I say recently, I mean today, with a report saying that the June quarter paints the picture of a company hitting its stride. Record cash flow, a hefty $432 million cash balance, and production firmly in line with guidance. The standout milestone is the proposed maiden dividend, an unmistakable signal that Alkane is shifting from growth mode into shareholder returns. Coupled with its recent inclusion in the S&P ASX Top 200, the company has stepped into the main stage of institutional visibility. So with all that said, let's get into the chart and see what's going on with ALK after this recent release. Now, as usual, on the left is the monthly chart, on the right is the weekly chart. Let's expand out the monthly and see big picture first, because this is a very cyclical stock as well. And you can see from these peaks and troughs, you got these sharp peaks, and then you get that, kind of price action that starts to trickle down. At the moment, we have seen a peak, but it does look like it's finding some support, and roughly around that momentum that it moves in, it actually is, somewhat holding up, and we do have a strong support level roughly around that $1.20 where price action has halted and found support in the past. Now, what's interesting is that even though it had this recent report with record cash, dividends coming out, and that it's also one of the top 200 stocks in our market. I mean, that's a huge achievement for a stock like this, and it means that it does get into the side of the institutions now, and there could be some further investment coming up. But have a look at what happens throughout these periods, where we have that consolidation and then price spiking up, another consolidation, price spikes up, and now we're at that consolidation period at the moment. Now, it is a little bit bigger than the usual consolidation periods. So I'd just be watching out a little bit. Make sure that we do find confirmation like we were talking about before, because you don't just want to buy on a falling knife. But I think that the market hasn't really reacted as it should to that result. And that just highlights how fundamentals don't always move. You might be looking at a report and thinking, well, this is looking great, and just buy from the report. But if the technicals aren't aligned with it, then tough luck. If the money isn't flowing into the stock, then of course the price action isn't going to move. But I think that this is showing a little bit of indecision at the moment. The week hasn't finished yet. Let's see how this week ends up. We have had multiple down bars, 1, 2, 3, 4, and this will be the 5th one if it does close lower. And I think that it's probably due for a little bit of a reversal. So I'd be definitely keeping an eye on Alcan. And I should mention that this is a gold player, but it is also diversified in other aspects as well. So it is well positioned to capitalize off the mining boom and the material boom that we were talking about earlier. So definitely one to watch and put on your watch list for a possible trade.